Quite frankly, when you hear everybody talking about the same thing, you know you're closer to the end than the beginning. Silver gapped lower, rallied a bit, fell apart, and now looks as if it is going to continue to be a difficult market to really get your hands around. And I think that makes a lot of sense because under the best of circumstances, silver is noisy. Precious metals continue to grab all the headlines. This is Chris from Hola Prime taking a look at your technical analysis roundup. The gold market initially rallied a bit during the trading session on Wednesday, only to turn around and show weakness and crash towards the $4,000 level. The $4,000 level, of course, is a large, round, psychologically significant figure and an area that we've seen a lot of noise previously. By dropping the way we did and then bouncing significantly, I think the only thing that you can take away from this is the fact that there's going to be volatility. As we change the time frame down to the 1 hour, you can see just how noisy this has been. A bit of a bounce, I think, makes sense for a minute here. But the question then is going to be whether or not we can hang on to gains. This type of move rarely happens in a vacuum. Generally speaking, you will see more selling pressure eventually. I'd watch the 4,200 level. I'd watch the 3,940 level. If that gives way, 3,800 does make a certain amount of sense, especially considering it was the measured move of the breakout of gold. Quite frankly, when you hear everybody talking about the same thing, you know you're closer to the end than the beginning. Silver gapped lower, rallied a bit, fell apart, and now looks as if it is going to continue to be a difficult market to really get your hands around. And I think that makes a lot of sense because under the best of circumstances, silver is noisy. This is not the best of circumstances, and I am watching the $47 level in the futures market, maybe a little higher than that in spot, because if we break down below there, then I think it's over. Short-term rallies would be sold into, would be my suspicion, and really at this point in time, there's nothing on this chart that suggests that's not true. This type of sell-off, again, doesn't happen in a vacuum, and I think it's probably only a matter of time before silver really gives it up. In fact, full disclosure, I'm already short via puts, the SIL ETF, because I've seen this story before. This type of move typically is the beginning of something ugly. If we can take out the top of the candlestick from the Tuesday session, then that's something different. Either way, caution is the word of the day here. The euro has initially fallen a bit during the trading session here on Wednesday, only to turn around and show signs of life. The 1.16 level is an area that I think a lot of people will be watching as it is previous support and resistance. And with that being said, this is a market that I also think will be paying attention to the 50-day EMA above. The 50-day EMA, of course, is an indicator that a lot of people will be watching. And anything above there opens up the possibility of 1.1725. A breakdown below the 1.1540 level opens up a drop to the 1.14 level, something that I think probably happens sooner than later. Keep in mind the FOMC meeting when they announced that there were going to be cuts later and there's a lot of trouble was the top of the euro. The US dollar's only rallied since then. So I am looking for a scenario where we continue to drop, perhaps down to the 1.14 level. If we break down below there, then that is a massive sell-off just waiting to happen. Looking at the British pound, you can see that we have fallen initially during the trading session here on Wednesday to reach the 200-day EMA and show signs of life again as we have bounced. Ultimately, this is a market that I think will be looking at this general vicinity as a potential consolidation area. And as we are between the 200-day EMA and the 50-day EMA indicators, that does suggest that traders are looking at this as a potential range of volatility and potential area that we will trade back and forth in. Over the longer term, we will make a move out of this, but if we drop, I think the 1.32 level offers a certain amount of support. Anything below there, I think it opens up the floodgates to the downside. It's worth noting that the US dollar has been very strong, especially considering that we were told that it was going to fall apart over the course of the next several months. And we've seen nothing but the US dollar strengthen against the majors. The US dollar initially did rally a bit against the Swiss franc during trading on Wednesday, but you can see gave back some of the gains. I think at this point, this pair is in the process of trying to find the floor. The 0.79 level is an area that I think a lot of people will be looking at through the prism of a floor. If we break to the upside, the 0.80 level is a barrier right along with this 50-day EMA. And if we can break there, then possibly we could go looking to the 0.82 level where the 200-day EMA would be approaching. If we break down below the 0.7830 level, then it opens up pretty significant downward pressure. Although I think sooner or later, you'd probably have the Swiss get a little upset about this. And they are known for intervening in the currency markets. A little bit of patience probably goes a long way here. And it's probably also worth noting that the interest rate is positive if you are a buyer here. The US dollar has gone back and forth against the Japanese yen during trading here on Wednesday, but it does look resilient. It looks like we are in fact trying to find a way back to the 153 yen level. The 153 yen level, of course, is an area that we had pulled back from previously, and I think that pullback and then the subsequent bounce suggests that there is real resiliency in this market, and that the interest rate differential will continue to favor the US dollar and therefore favor the upside. If we can break above the 153 yen level, then the 154.50 yen level is your next target. Regardless, if we drop from here, I'm looking for an opportunity to find value, maybe right around 151. All things being equal, this market has been bullish since the Japanese election, and I think that will continue to be the case. But really, when you look at it from a longer term perspective, we bottomed in April. The interest rate differential continues to see traders jumping into this and getting paid to hang on to the dollar against the yen. Looking at the US dollar against the Canadian dollar, we have fallen during the day and we are below the 1.4 level. This is an area that was a significant barrier, but quite frankly, it looks like we are trying to find back a bit, so I'm not overly concerned about this. I think this is just a simple pullback that traders will probably continue to buy into. After all, in order to short this pair, you'd want to own the Canadian dollar. I don't think too many people do. The economic announcements coming out of Canada have been a little bit better as of late, but it's also worth noting that the U.S. economic numbers have been a bit better. The interest rate differential continues to favor the U.S. dollar over the loonie, and I think that is part of what will continue to drive this market to the upside. The 1.4250 level is a target where we have plenty of supply. And with that being said, I think you have to look at this through the prism of a market that is trying to do everything it can to reach that level. And short-term pullbacks, I think, are possibly going to be looking at the 50-day EMA as support as well. And that's assuming we even get there. We've recently had the so-called golden cross, where traders see the 50-day EMA breaking above the 200-day EMA about 4 or 5 days ago. And that generally gets people interested for a longer term move. A break above the 1.41 level really gets this market moving. But in the meantime, I think it just remains buy on the dip. I don't think anything's changed here. The Australian dollar did try to rally a bit during the trading session here on Wednesday, but it is struggling with the 200-day EMA. The 200-day EMA, of course, causes a lot of noise, and it will have a lot of people paying close attention to it. If we can break above there, then it opens up the possibility of a move to the 0.6550 level, where we also have the 50-day EMA. To the downside, I see some support at 0.6450 and most certainly at 0.64. Anything below the 0.64 level truly opens up the trapdoor to lower pricing. Keep in mind that the Australian dollar is highly sensitive to global trade and global tariff talk, and as long as that's the case, I think this ends up being a pretty volatile and noisy market in general. I have no interest in trying to get too big with this position, but I think short-term back and forth trading probably continues to be how people play this. The New Zealand dollar rallied quite nicely, only to give back those gains during the trading session here on Wednesday, and now it looks like we are trying to stay in the same little consolidation area that we have been in for a while. Market participants probably look at the 0.57 level as a potential target, but with that being said, I also recognize that if we were to break down below the low price on Monday, that opens up the floodgates, and I think you would have a lot of issues at that point when it comes to the Kiwi dollar trying to hold its own. The economic calendar is pretty quiet. There's nothing going on with the Kiwi dollar between now and then, so this tells me we are probably looking at a situation where this is all about US dollar strength or perhaps even fear. If we do rally from here, the 50-day EMA is currently at the 0.5830 level, could offer a little bit of a barrier. The euro has been all over the place against the British pound during trading here on Wednesday as the 50-day EMA continues to see a little bit of support put behind it. But all things being equal, this is a market that, if we are honest about, is a sideways market that just doesn't have much in the way of going for it. The 0.8750 level above is a bit of a resistance barrier, perhaps even a ceiling. If we could break above there, it would obviously be very bullish. Perhaps opening up the possibility of a move to the 0.89 level based on the measured move of the consolidation between the 0.8750 level and the 0.86 level. Breaking down below the 0.86 level would be very negative and could open up a move down to the 200-day EMA. Ultimately, this is a market that I think has more sideways action than anything else. And we should be looking at this through the prism of maybe a secondary or even tertiary indicator when it comes to trading the euro or the pound against other currencies like the US dollar. At this point, neither one of them looks very strong, so I think you've got a scenario where you're just basically trading short-term charts and going back and forth. The euro has initially gapped lower against the Swiss franc, only to turn around and show signs of resiliency again. The 0.92 level is an area that a lot of people will be watching closely, as it has been a significant support level multiple times. If we continue to see a little bit of upward pressure, then the 0.9250 level opens up the possibility of a short-term ceiling that, breaking above that, opens up an entrance into the previous consolidation. The market rallying from here probably sees the 50-day EMA offering a bit of a barrier, and it is worth noting that this is a pair that is very sensitive to risk appetite, meaning that if the market feels happy and wants to take advantage of riskier assets, the euro typically gets bought up. On the other hand, if things turn around, the Swiss franc is a currency that is often used as a safety currency, and you will have to treat it as such. A move below the 0.92 level could get the Swiss National Bank involved, though, as they do not like the Swiss franc strengthening too much against the euro, as 85% of Swiss exports end up in the European Union, and therefore it makes their goods too expensive. The Swiss National Bank does not hesitate to get involved and start manipulating this pair, intervening if they have to. That's part of the reason why I'm a little cautious trying to squeeze this to the downside at the moment. Looking at the euro against the Japanese yen, we have seen the market initially drop a bit during the trading session on Wednesday, only to turn around and show signs of life. By doing so, the market looks as if it is trying to go higher. We gapped higher a couple of weeks ago to see the euro really take off. The gap here has been due to the election in Japan, and we have come back to test the top of the uh, gap, and that, of course, is a typical move. And with that being said, the fact that we are finding buyers here could send this market back to the 178 yen level, an area that has been important more than once. Ultimately, this is probably moving based on Japanese yen weakness more than anything else. I'm not particularly fond of the euro itself, but I definitely don't like the yen, and I think that continues to be the story here. You get paid to hold this pair, albeit not as much as you do something like the pound against the yen or the US dollar against the yen, but it is something worth taking into account when you decide to trade this pair. Ultimately, I remain bullish. The British pound has gone back and forth against the Swiss franc yet again as we continue to bounce around in the 50 pip range here between 1.06 and 1.0650 levels. This is an area that has been important previously, and it's worth noting that this area has been tested a couple of times recently, and now we are trying to break down. If we start to fall from here, it could open up a move down to the 1.05 level. If we break higher and get above the 1.0675 level, then we could go looking to the 50-day EMA near the 1.0733 level. All things being equal, this is a market that I think continues to see a lot of volatility, and it is, much like the euro against the Swiss franc, very sensitive to risk appetite around the world. After all, this is again a situation where traders look at the Swiss franc as a safety currency. And although the British pound isn't exactly a risk currency, it's a risk on currency. And therefore, one would have to think that this is an area that might offer a little bit of a floor. The British pound initially plunged against the Japanese yen only to turn around and show signs of life. By doing so, the market looks as if it is trying to defend the 202 yen level as support. It's also worth noting that the 50-day EMA sits just above the 200 yen level and rising. It is a very strong uptrend, and I think that will continue to be the case as the interest rate differential continues to offer a little bit of a gain as traders continue to build their accounts, pad their trades, and push this market towards the 205 yen level. All things being equal, this is one of my favorite ways to short the yen, and I think it will continue to be a scenario where each dip gets bought. If we were to break down below the 200 yen level, then we start to have to ask questions. But right now, this is a market that looks like it's got nowhere to go but up over the long term. You might have to be a little bit cautious in the meantime, but ultimately, this is a one-way setup. The Canadian dollar has risen against the Swiss franc to show signs of resiliency during the trading session on Wednesday. The 0.57 level offers a little bit of a barrier at this point, as it was previous resistance or support. It should now be resistance. All things being equal, this is a market that I just don't like the idea of trying to get too cute here. There's no need to fight the overall downtrend, and I think somewhere between here and the 50-day EMA or even the downtrend line, you will see quite a bit of selling pressure and the first signs of exhaustion. I have no issues whatsoever of selling this pair because not only is it obviously in a downtrend, I don't like the Canadian dollar from a fundamental standpoint anyways. It certainly is not going to be the currency to break the Swiss franc. The Canadian dollar has rallied a bit during the trading session on Wednesday as the Canadian dollar, although weak, isn't as weak as the Japanese yen. All things being equal, short-term pullbacks, I think, offer buying opportunities with the 50-day EMA near the 107.25 yen level offering support. Ultimately, I think this is a market that goes looking to the 110 yen level, but it may take some time to get there. Ultimately, this is a little bit of volatility just waiting to happen, but given enough time, I think you have to look at this as a market that, although it probably does fairly well in the sense that it is the Canadian dollar against the yen, there's a multitude of other currency pairs that you could use to short the yen that should have much more traction. After all, there are currencies out there that are much stronger than the Canadian dollar right now, such as the British pound or the US dollar, that make more sense and give you more swap at the end of each day. The euro initially fell against the Norwegian krone, only to turn around and show signs of life again. Ultimately, this looks like a market that is trying to turn things around and chop to the upside, but keep an eye on the 50-day EMA, the 200-day EMA, and the 11.75 level. The 11.75 level has been a bit of a resistance barrier, and if we can break above there, then it opens up the possibility of a move to the 12 level. A drop from here opens up a move down to 11.55 and then possibly 11.4. This is a noisy market. This is one that does tend to be very volatile and choppy, but it does tend to get into ranges quite nicely, giving you opportunities to trade in both directions. It's possible that might be what it's trying to do right now, but it is also worth noting that this is a scenario where traders will continue to ask questions about the euro. And then, of course, the Norwegian krone is related to oil, which hasn't been all that hot. The euro has gone back and forth against the Swedish krona, sitting just above the 10.88 level, which is a significant support level and an area that I think a lot of people will be watching. The market continues to see a lot of noisy behavior. If we were to break down below the 10.88 level, it could open up a move down to the 10.8 level. It's worth noting that we were in a pretty significant downtrend previously. So if we don't hold here, then I think we drop. If we do hold here, then we may continue to trade in the same range that we've been in for a while between 10.88 and 11.08. Again, this could offer nice range-bound trading, but we'll just have to wait and see how that plays out. The New Zealand dollar initially rallied against the Japanese yen during the trading session on Wednesday, but it looks like we are struggling to get above the 200-day EMA. The market turning around the way it has shows a certain amount of resiliency, and the shooting star could open up the possibility of a shorting opportunity. If we break above the top of the candlestick, then we could go looking to the 88 yen level. But ultimately, I think you've got a situation where the market probably remains somewhat range bound, and I believe that the 85 yen level is massive support. If we were to break down below there, it would change everything, not only in this pair, probably in multiple other yen denominated pairs. Again, I think a pullback makes sense. I wouldn't short this pair though. I don't want to own the yen, even as weak as the New Zealand dollar is. I just wouldn't be bothered with this. The New Zealand dollar initially rallied against the Swiss franc, but gave back those gains as we are trying to finish the day basically flat. This is a market that's been in a downtrend for what seems like a lifetime. And as a result, the fact that we couldn't even get a green candle, or may barely get a green candle after a couple of green days, tells you that the sellers have gone nowhere. They're still involved in this market, and we will continue to see a lot of downward pressure. The New Zealand dollar, of course, is a currency that traders buy when they feel like taking risk. The Swiss franc, of course, is a safety currency. So, with that being the case, you have to be very cognizant of what's going on here. If we can break down below the 0.45 level, that could open up a trap door. And although the Swiss National Bank is known for intervening in its currency markets, they don't care about the New Zealand dollar. They care about the euro, maybe the British pound, and maybe the US dollar. So this one could be a lot weaker than the others, and it really doesn't have a major influence on the possibility of central bank intervention. The US dollar has been very choppy and back and forth against the Mexican peso. All things being equal, this is a downtrend line that I think a lot of people are watching, right along with the 18.50 Mexican peso level and the 50-day EMA hanging around. This market, I believe, continues to be very noisy, but I think overall you have to look at this as a market that has been in a downtrend. The interest rate differential continues to favor the Mexican peso, and ultimately, I think it all lines up quite nicely. That being said, if we were to break above the 18.65 level, then we could go much higher, perhaps to the 18.85 level. The 18.20 level underneath is significant support. It could be our target if we break down, but ultimately this is a market that is going to continue its trend from what I can tell. But keep an eye here, because if we do break out to the upside, it's possible that we could see maybe US dollar strength and risk off behavior around the world. Nonetheless, the Mexican peso, of course, is representative of the Mexican economy, and the Mexican economy, of course, is highly levered to exports to the U.S. So as long as things are relatively okay, this pair typically will drop as traders collect that swap. The light sweet crude or U.S. oil market has rallied quite nicely during the trading session on Wednesday after forming several supportive candles. But really, at this point in time, I think what you're looking for is a selling opportunity somewhere around the $60 level or so. And with this, I think it's just a matter of waiting to see whether or not we get an opportunity to start shorting closer to 60. I don't know if we really get that. I mean, we may just fall over from here, but either way, the one thing that I won't do is be a buyer. As a matter of fact, I don't know that I would buy the oil market until we break above the $62 level. There is a serious lack of demand out there, at least perceived demand. And then, of course, you have to keep in mind that there are concerns that maybe, just maybe, not only is the global economy slowing down, but the oversupply coming out of Russia, OPEC, and the United States continues to be a major overhang. Looking at U.S. indices, we continue to see a lot of noisy behavior. The NASDAQ 100 has fallen. It's just noise and nonsense. We are just bouncing around the 25,000 level. Nobody really knows what to do with themselves at this point. I think we probably see buyers come right back into the market. There is an uptrend line and the 50-day EMA in the picture that will offer support. We'll just have to wait and see. But it looks, at least in the short term, that we are forming a little bit of a double top near 25,250. Nonetheless, there's nothing on this chart that screams you should be a seller. So it just is what it is. The S&P 500 broke down below the 6,700 level during the trading session, but it looks like we are trying to hang on to this. So with that being said, again, it's a short-term pullback. I don't read too much into it. I think we probably have the opportunity to be a buyer of dips in this market, as we've been in an uptrend for some time. I think really we're just kind of hanging around waiting for the next reason to get moving. The Dow Jones 30 did make an all-time high during the previous session and then fell during this one. It's stabilized. It's not as resilient as some of the other indices, but it's also higher. So you have to keep that in mind. All things being equal, the U.S. indices all look fairly robust. It's just simply a down day. I don't read too much into it at the moment. Bitcoin crashes down into the $108,000 level. It looks like there are fights happening in this area to support it. We'll just have to see if that holds. But Bitcoin has been really lackluster. It hasn't completely cratered, at least in the last week or so, like I thought it could after that massive sell-off. So that is something to hang your hat on. Perhaps we are heading into consolidation. Overall, it looks like the U.S. indices are struggling a bit during the day, but I don't know that this is the beginning of anything important. The U.S. dollar gave back some of its strength, but not much. And of course, metals have crashed, but also had a nice volatile bounce. I don't know that I trust that bounce. Typically, when you see that, it's the beginning of the end. So we'll just have to wait and see.
Hola Prime, trade with transparency.